walk you through 3 indicators, 1 system, and by the end of this video, you'll understand every single line, box, and number on your chart, and exactly how to read them in real time. This is the Whitestone Capital Trading Bundle. We've got the WSI Indicator, the all-in-one engine, the AU2 Adaptive Unified Model, and the Velmont Supply and Demand Confluences. I'm going to walk you through each one top to bottom so nothing on this chart is a mystery. Let's get into it. Quick map before we start. Indicator 1 is WSI. It scores the market, it grades the setup, and it prints a full trade plan, the entry, the stop, and 2 targets. Indicator 2 is AU2. It takes everything in WSI and adds a higher time frame filter, a standard deviation level engine, and live entry zones. And Indicator 3, Velmont. It is your pure structure supply and demand map. You can run them together or on their own. First, we're going to go with WSI. Let's start with the flagship, the WSI Indicator. This is the all-in-one engine. It reads the chart, scores both sides of the market, grades the setup, hands you a complete trade, and then manages it for you while you're in it. We'll go from top to bottom. First, what it draws, and then how it thinks and how it runs the trade. We're going to start with the 3 moving averages. This is the EMA cloud. The thin blue line is the 21 EMA, your fast trend. The gray line is the 50 EMA, your medium trend. And then the thick white line is the 200 EMA, the big picture trend line everyone watches. Now look at the shaded area between 21 and 50. Right here. When it is green, the momentum is up. But when it flips red, the momentum has turned down. Simple rule, stacked in green, favor longs. Stacked on red, favor shorts. The dotted line is the VWAP, the daily fair value line, weighted by volume. Above it, the line turned green and the buyers are in control. Below it, it turns red and the sellers are in control. These 2-step lines are PDH and PDL. The previous day high and the previous day low. The markets love to react at yesterday's extremes. So these are magnets and decision points, and the dashboard prints both exact prices on the right. So you'll never have to guess which is and which is not. Now the colored boxes. These are the trading sessions. Blue is Asia, green is New York, red is London, each wrapping their sessions high and low. Pay special attention to the Asia's box. See those dashed lines extended to the right off Asia high and low? Those are projected forward. Price often sweeps one of them at the New York Open before the real move, and the indicator actually watches for exactly that. These little tags BOS and COCH. BOS is a break of structure. That means that price has broke a prior swing in the same direction the trend was already going. That's continuation. But COCH, change of character, means it broke the other way. That's your first sign that the trend may be churning. A plus sign is a bullish, and a minus sign is bearish. These tags are the backbone of the whole system. Most entries need a BOS or COCH to confirm before they actually fire the trade. So these boxes that are labeled fair value gaps are imbalances where price moves so fast that it skipped a zone, and price tends to come back and fill them. The bigger boxes are the order blocks. The green demand block is where buyers stepped in hard, and the red supply block are where sellers did. That's where smart money is parked. And these dashed lines are liquidity. The highest and the lowest low of the last 20 bars, the levels price hunts before it reverses. So, what's this yellow zone? Well, this golden box is the OTE, optimal trade entry, the sweep spot of a fib retracement between 61.8 and 78.6. When price pulls back into with the trend, that's the textbook discount area entry. Over on the right edges, these are stacked on volume zones right here. The gold POC bar is the point of control, where the most volume is traded. The strongest magnet on the chart, the red bars, are the heavy supply zones. Blue below are heavy demand. And the thin gray LVN bars are low volume gaps that price slides through fast, so you won't see any resistance through them. Now, here's the brain, the dashboard. The top right, it shows your position, flat, long, or short, and which strategy fired it. These two cells are scored. Bull and bear, each graded out of 100 across trend, VWAP, structure, divergence, and higher time frame alignment. Next is the letter grade. S is a perfect score at 95 and up or down to C. By default, the tool only takes a trade graded B minus, plus, or higher. And up here, daily OK means you're under your loss limit. Hit it and your tool stops taking trades, discipline, and it's automated. Trade results. So when a setup passes, you get a full trade panel. The white line is your entry. The red line and shaded box below is your stop loss. The gold dashboard line is target 1. The green line is target 2 with a profit box. And read this label. It tells you the direction which strategy fired and grade the score, the exact entry price, and how many contracts to take, and the dollar risk. Everything you need to place the trade in one tag. However, the WSI TradeBot only takes trades off the 15-minute. It does fire on 5-minute and 1-minute. However, it is not accurate, and the statistics that we marketize is only off the 15-minute. Also, the TP1 is the main target point. TP2 is hardly ever hit. Rather, because we trade manipulation on the WSI TradeBot, we want to target TP1 for the majority of the time. Here's what makes WSI different. It manages the trade after the entry. The moment price tags target 1, the stop jumps to your entry, meaning you go break even. Well, that's break even. So worst case is a scratch, not a loss. After that, the stop trails behind your structure to lock in profit. Conservative, standard, or aggressive, those also align dynamic TP2, which stretches the target if momentum keeps pushing. And the safety net, the emergency exit, is the market flip hard against you before break even. The trade closes early to protect capital before the stop is even hit. This is AU2, Adaptive Unified, version 2. Think of it as WSI with a higher IQ filter on top. It keeps the strategies you just learned, but adds 3 big things: a hard, higher time frame filter, and standard deviation level engine, and live draw entry zones. Let me show you each. So, these shaded background zones are higher time frame zones pulled from 4-hour and 1-hour charts. Green is a big picture support. Red are big picture resistance. A little asterisk means the zone is fresh and untouched, which is when it's strongest. And these dotted lines are the equilibrium, the 50% midpoint of the range. Above it is its premium, where you look to sell. Below is the discount, where you look to buy. AU2 will actually block you from buying in deep premium or selling in deep discount, which keeps you from chasing. The purple range is the manipulation move, where price ran the stops right before reversing. Everything AU2 projects is measured from it. Off that box, it draws a ladder of standard deviation targets. The label lines on the right. +1 sigma is your first target. Then +1.5. Then the deeper measures move into gold. Out to the terminus, the furthest reasonable extension of the move. These are your taken profit shelves. price tends to pause or reverse at each rung. And POC, VAH, VAL give you a live volume profile of the setup. Now, this is my favorite part of the AU2, the entry zone. This bright box, green for longs and red for shorts, is the exact area you are looking to actually enter your trade. It also redraws itself live as the setup matures. The solid line through the middle is your limit entry, the precise price to set your order. And the label on the right gives you a full price range of the zone. You don't have to guess where you're getting into it. It's drawn up for you. All you have to put is your limit order, and you can enter these longs just like we did. AU2 runs 11 pods. That's its word for strategies. You already know most of them: SFP, FVP, VWAP, Divergence, Liquidity Manipulation, Phantom, and FIVL. AU2 adds 3. PO3 OTE, and Supply and Demand Pod, and Devil. The Devil's Mark is a special candle that opens right at its own high or low at the start of a newer high time frame candle, a sign of aggressive decision open. When it appears inside a deep measured move box, it turns gold and it marks a high conviction reversal. Put it all together, AU2 grades every pod, throws out any that fight the higher time frame filters, and only fires the best graded setup and survives. So when AU2 prints a trade, it has already cleared the 4-hour and the 1-hour, the standard deviation map, and the strategy grade. It's the most selective tool in the bundle, fewer signals, and higher quality. Last one, Velmont, Supply and Demand. This isn't a signal tool, it's your map. It draws the raw structure and supply and demand picture that the other two indicators are reacting to. If WSI and AU2 are the GPS, Velmont is the terrain underneath. Velmont shows 2 layers of structure. The solid lines are swing structure and big important breaks. The dashed lines are internal structure, the smaller moves inside. Both labeled themselves BOS or CHOCH. Just like before. And these tags, strong highs, weak lows, and so on, grade the swing points. A strong high should hold and likely cause a reversal. A weak high has been tapped too many times or has liquidity sitting above it, so it's likely to break. That tells you which level you should trust and which one you should probably fade. Right here. Strong high, weak high. We can see it from there. These are Velmont's order blocks. And the brightest tells you the story. A bold, solid block is fresh, never touched, highest probability of holding. As price taps into it, the block fades, and you'll see a small T for tapped or for P. For partial, bold means trust it. Faded means be careful, and these dotted lines tagged EQH and EQL are equal highs and equal lows. Price hitting almost exactly the same level twice. That's a pool of liquidity resting right there and prime target for the next sweep. Velmont also plots fair value gaps from multiple time frames. At once 5-minute, 15-minute, 1-hour, and 4-hour, and the bigger the time frame, the stronger the gap. And the headline features supply and demand zones with fibs built right into it. Each box has a 50, the 61.8 and the 70.5 drawn inside, and the entry sweep spot is the 61.8 to 70.5 band. It is the label says sweep price grab liquidity before forming the zone, and those are the highest quality of zones. So how do you actually trade this? Here's the simple stack. 1. Open Velmont and read the terrain. Where's the fresh order block, and are we in the premium or are we in the discount? 2. Check AU2. Is price in the live entry zone and the higher time frame filters agreeing with each other? And is the standard deviation target to aim at? Has it been drawn up? Is it ready? 3. Let WSI pull the trigger. When the grade clears and the panel prints, you've got an entry, stop, and targets handed to you. And the tool manages it from there. Velmont shows you where, AU2 confirms the context, WSI executes. That's the entire Whitestone Capital Bundle. Every line, every box, every number explained. Take your time with each indicator, get comfortable reading the dashboard, and let the system do heavy lifting on management. If this made it click for you, you know what to do. I'll see you in the next one. Trade safe.